Right, let's dive straight into this explainer. Because look, what happens in Washington absolutely doesn't stay in Washington. It lands smack bang on the kitchen table right here in Ireland.
Now, as you probably know, our economy is deeply tethered to the States through three massive channels: U.S. multinationals, our global exports, and international investment flows. This whole setup didn't just happen by accident, right? It's been the absolute engine of our rapid growth over the last few decades, built on a really deliberate strategy to attract foreign direct investment. But it means we aren't just sort of loosely connected to America, we are deeply intertwined. So, any shift in U.S. policy, it hits us hard and it hits us fast. And this brilliantly highlights a massive divide we really need to talk about. On one hand, you've got these colossal U.S. corporations with the sheer flexibility to just shift to their global operations and dodge new American policies. But on the ground, the everyday Irish working family faces a starkly different reality. The worker here has to bear the brunt of those economic shockwaves directly in their own pocket. I mean, you can't exactly offshore your mortgage, can you? And you definitely can't offshore the weekly shop when prices start going through the roof.
So, let's look at part one of this ripple effect: the threat to Irish jobs. Now, this exposure isn't just spread evenly across the board. It's highly concentrated in tech, pharma, and finance. These are the exact sectors providing a massive chunk of the highest-paying jobs in the country right now, supporting thousands of families. But remember, these companies don't operate here in isolation. They're cogs in a massive global machine. So a policy change drafted across the Atlantic can instantly upend their game plan right here on our doorstep, literally shifting the ground beneath thousands of workers before they've even clocked in for the day. It triggers a very clear chain reaction. Step 1, a policy shift in the U.S. leads directly to Step 2, a global hiring slowdown or a pivot back to stateside operations. And that trickles down locally in a major way for Step 3, stiffer competition for roles and slower income growth. You might not see mass layoffs overnight, but the reality on the ground becomes fewer opportunities, stalled expansion, and just a much tougher market for anyone trying to build a career or get a decent pay rise in Ireland. Moving from the earner to the consumer, here is part 2, rising costs for families. While the job market might take a minute to react, prices? Well, they move fast. When U.S. trade or energy policies shift, global markets tend to panic, and oil prices absolutely surge. That directly drives up the cost of filling the car to get to work, and, of course, the energy bills to keep the house warm through the winter. It's a direct hit to your monthly budget, and not because of any decision made in the day, mind you, but purely from global knock-on effects that leave us feeling the pinch.
And it certainly doesn't stop at the petrol pump. Because we're an island nation that imports a massive amount of what we actually consume, any spike in shipping and supply chain costs gets passed straight onto you at the till. It makes the weekly shop noticeably more expensive. Suddenly, the absolute basics on the supermarket shelves are eating up way more of your wage, draining your financial flexibility month by month. It's that silent squeeze on the family budget that catches everyone out.
Which brings us to part 3, the corporate tax squeeze.
Have a look at this. A remarkably small number of massive U.S. companies provide an absolutely staggering chunk of our national tax revenue. Basically, they're bankrolling the public exchequer. Now, it's grand when the money is flowing in, making the books look brilliant, but it creates a massive, massive vulnerability. If U.S. policy suddenly makes it far more attractive for these companies to repatriate their profits or just operate domestically, the sheer advantage of being based in Ireland evaporates, and that revenue tap gets turned off really, really quickly. And if those firms are incentivized to stay stateside, our government revenue shrinks rapidly. Look at what's at risk here: vital funding for the HSE, education, and public infrastructure right across the country. If that corporate tax well runs dry, the government is backed into a seriously tight corner. They either cut public spending, increase national borrowing, or force the state to hike your personal income taxes just to balance the books. Every single one of those paths hits the working family squarely in the jaw.
And finally, part 4, the ripple of uncertainty. If there's one thing markets absolutely despise, it's unpredictability. When businesses get cautious due to a lack of clarity from the U.S., investment dries up, hiring freezes, and spending just grinds to a halt. We aren't just talking about one isolated policy here. It's the messy collision of trade tariffs, corporate tax shifts, and energy regulations, all happening at the exact same time. That sluggishness ripples straight through the entire Irish economy, from the big industrial estates right down to the local high street.
So, what does this actually mean for your family? Well, even if you don't work directly for a big tech or pharma giant, you're swimming in the exact same economic waters as the rest of us. When growth slows and costs rise, you feel the pinch. You really need to recognize how this massive global exposure affects your own spending, your saving, and your financial planning for the future. You don't need to be a political expert to be affected. The connection is already right there in your bank account. Because history shows us time and again that global economic decisions never stay contained. They ripple outward, hitting us in ways we don't immediately expect. It's a pattern seen across different eras and systems, even stretching back to the complex ripple effects seen during things like the German colonial empire. The past proves that isolation is a complete myth. So stay sharp, understand these knock-on effects, and plan accordingly. The real question you have to ask yourself today is just how insulated is your own weekly budget from the next policy penned in Washington?